So, hello, and a massive hello to everybody. How we all doing? Rocking and rolling in a free world. Here we go. So, 22nd of April, 2019. No trade cost recommendations. We're responsible for their own stuff. We're here for educational purposes only. What's happening? Not much. So, again, a little bit of a slow day today. Public holiday across the board in Europe. So, I just thought I'd do a little bit of a impromptu session. Any question? Nothing's off limits. Just shoot. If anybody wants me to look at any chart, just paying it forward. So more than happy to discuss anything. Hey, Hammer Time in the house, man. That's been ages. Good to see you live. So what's happening? So yeah, just shoot everybody. Just ask any chart you want me to review. Nothing's off the table. We'll just go through it and look at it. Yeah, sure. What's going on Aussie? Well, Aussie's been a little bit of a tricky one lately. We still have a fairly clear view in terms of the bigger picture, but shorter term, it's been a little bit messy. Like everything, with this compressed volatility across the board. Let's see if this works. If it doesn't, I'll have to revert back to the MT4 if the trading view is stalling for some reason. Okay, there you go. So AUD. Hey man, how's it going? Long time no see. Well, this looks like it's taking ages. Let's just pop up the FX Pro. Will be quicker. So here we see on the daily, right? So we've been short this for quite some time, without going into the fundies. Let's just look at technicals here. What's been happening is, once it couldn't hold below these moving averages, and once it couldn't hold this series of lower highs, so you got to watch out, because it's going to clearly want to try and clip those moving averages. And once it goes sideways, since it's been so long since it moved all the way back into the 200, if it gets some traction, then the risk is really going to be for it to want to go and clip those stops above the 200 DMA, right? So the focus for us was really just simply on how was it going to manage and how was it going to deal with that 200 DMA. And here you see that what happened is it moved higher, but it was simply unable to attract new buyers at highs, right? So it clipped right above that level and just could not attract any new buyers. So as far as we're concerned now, as long as this holds, which is incidentally, it's failed from here before, we'd expect this to go right back down and try to resume this broader trend. Now, the question is going to be, how is it going to tackle this, this channel, this attempt to break higher? And we'll likely know this week, as we got a lot of central banks on deck, and we'll have to see how risk trades, we'll have to see how gold trades. But right now, it's extremely choppy. We would call this essentially, no man's land inside these moving averages here. There's just really no man's land. Unless we get a daily or weekly close either back above or back below, it could be very, very choppy. And what we would say is here, don't get confused by, let me clear this up, don't get confused by velocity of move inside range. Anything inside here means absolutely nothing to us. Where we would have new information would be if we get a daily close above the 200 or a daily close back above the 50. Back above the 200, then more spike. It's got a lot more room to correct higher. Back below the 50 DMA, then these lows will be in play. That's the way we would be. That's the way we would be looking at it. Hey man, Hammer Time. Yeah, and that's similar in the sense the Kiwi's being a lot nicer, right? We've also been short Kiwi, and it's been a less messy, right? Because you see here how once it broke down again, right? You could draw this line in a bunch of ways, but broadly speaking, whether you're looking at this or whether you were looking at this, essentially what happened is it kept on making lower highs, and once it broke down, see how the rally got sold back again into this cluster of moving averages. So has it been messy? Sure. I think here you could easily argue for both another correction higher or a move lower, because ultimately here we're still in a very choppy range. But the way we're looking at it and the way we've been trading it with extremely tight stops in this area is continuing to play the trend, continuing to get short here for new lows, and still expecting this level to get taken out in the same way where we expect those lows to get taken out on Aussie. But again, it's been extremely choppy. Yeah. Very, very choppy. And in the same way, that's, and it's all the commodity currencies, right? And now we've seen all this wheeling and dealing on crude with this headline flow overnight. But it still looks like CAD is trying to complete, all this set of symmetrical moves to continue to try and move higher. But right now we're just stuck, right? And to put things into context, I mean, look at these highs into these lows, right? You're talking about 200 points, but essentially we've been here for 1, 2, 3, 4, 5, 6, 7, 8 weeks. If you go back, really, we're trading to where we were we're pretty much where we were December last year. So the market's just going nowhere quick. So these are very tricky situations, because if you have a bias, you could easily justify both a long view or a short view, because essentially the market's doing nothing. So I think what's important is to understand the context, understand the shorter ranges that are in play here, and at what point inside or outside of those tighter ranges will you have the information to confirm, right, either a breakout or not. That's the most that's really the most important thing to keep an eye out for. Yeah, I mean, it's messy, right? But it's similar on Euro, right? And so if you're bearish Euro or bullish DXY, you're going to look at this chart and you're going to say, this is perfect, right? It's very hard to say that this is a bullish chart. But equally, if you're looking at this in an unbiased way, it's also fairly clear that the market is really unable to attract new sellers at lows, and it's stalling, right? So it's important not to get, I think it's important not to get too big, not to get too stubborn inside these ranges, and just understand that unless you get, a solid close above here, shorter term, it's very hard to get uber bullish. And unless you get a short-term close or a weekly close below here, it's very hard to get extremely bearish at these lows. What you'd have to expect is to continue to see a lot of chop, but and velocity inside range that may or may not mean anything unless you get, it's the same as just DXY inside that 98 and 96. We can go through as many time frames as we want. We can go through as many different technical styles of analyzing it, but unless we break outside and sustain outside above 98 or below 96, it's just chop, right? It's just chop. And these tend to be situations where it's very hard for traders because they tend to get stubborn or they tend to get too big when the volatility is compressing. And then inevitably, if you get it right when it breaks out, you feel like a hero. If you get it long, you're just stuck. You're completely offside and it's very hard to come back. So it's much better to stay focused, try to stay detached, but not too detached that you lose focus. And if you want to have some small positions on, you have some feeler positions on ready to add, but it's really hard to commit in because we're going nowhere, right? And yeah, a lot of people will be trying to play those Euro Aussie and Euro Kiwi longs, right? I'm not a huge fan of playing the crosses at all. In terms of positioning, I'm still positioned short Aussie and Kiwi, but it's just not that interesting. I've got small longs on Euro USD running just as tactical trades. And there's just not a lot going on. You know, the most interesting thing here today for me really is after the whole debacle on Teslas, to see what happens on Tesla today. And this week, that's really the focus in terms of FX land. There's just not that much going on. You know, another thing which is interesting here is to look at USD and you see the way this is just going kind of like squeezy cocaine angel here. And you'd have to think, right, this is not the healthy move, is not for this to go to A to B in a straight line. But this is a very hard position to hold fade, because you can't blindly sell into strength here. Also because the carry's is a bitch on this, right? And as long as you've got the SMB talking about wanting to go to more negative rates, etc., you can't fight the flows here, right? But would you expect to see, if we get some kind of risk-off flows, some kind of correction here on equities, this to be an interesting short-term fade? Sure, but you're going to get carried out in a stretcher if you keep on trying to fade these, right? You have to understand that we're back into a very interesting resistance, that this is held for a long time, but it could easily break out. So I think on Swissy, I would not be getting long, but I would definitely not be trying to sell into strength here, right? It's just also the carry's going to kill you. So you have to be focused. But I think tactically intraday, right? If you get a situation where all of a sudden we see equities roll, you start to see some dollar weakness across the board, and this starts to sell off, then you've got beautiful little asymmetry here to try and get short, and you'd expect, at least, 50 back of this move to unwind. So you've got some room to run here, but you can't be stubborn. I think what's a lot more interesting, if you're looking at that kind of trade, is I would be focused on yen, right? And on yen, the focus is really just that 112, right? How is the market trading around that 112, and what is happening there? It's also a choppy one, but I think here, also, if you look at Trump and co, they're not going to be too happy if this starts to get too big, strengthen too much. So I still think that this is a nicer play. This is a nicer play than the Swissy, and I would be watching this very, very closely. I think especially if we can't get any traction above here, and you see you've got a nicer, flatter level, the 110 could come into play extremely quickly. And I think in terms of a shorter term trade or a 2-3 day or weekly swing, this is a nice trade. Short here, looking for these levels to hold from a day close perspective, and looking for this to pull back into the 111 and the 110. Not looking for the end of the world, but that's what you just be looking at to broadly stay inside this range. And you see it could easily come back into, let me just draw this better, back into the 110 and still hold inside this pattern. But I think that's something which I would be focused on. On the equities, I don't think there's a lot of edge trying to fight this. I'm still holding shorts on the Russell. That's the one I've been trading a little bit. I've been trading from a swing perspective. I've been trying to trade the NASDAQ a little bit more tactically, but the Russell is the one I've been holding on to in terms of bigger picture swing, right? I think that's the most interesting one. But in terms of currencies, it's just, there's just not that much going on. Still holding longs on Euro GPB from a swing perspective. Keep on building this position, have been trading this very actively, but there were an awful lot of opportunities to get back into this trade here off these lows for a move back into, the 88s or higher. This comes in line with our view that things are going to get worse before they get better. And we're still looking for the 128 to come back into play on cable, but much prefer expressing the short GPB view by long Euro GPB trades rather than short cable. But still think that things are going to get worse before they get better. But you see also here, we've been stuck. We'll have to see now that Parliament comes into play. We'll start to see the headline flow pick up again. So hopefully we get more volatility, but again, haven't been trading GPB too actively, have just been trading the Euro GPB from holding some swing positions long on that. Crude, I have absolutely no interest to do anything on crude here. You'll probably see a lot of guys who are short wake up offside today, so I wouldn't be surprised if the dips are rather shallow as people just try and get out of those. But yeah, it's a tricky one because with this kind of headline flow, especially hitting in the overnight time, what are you going to do? You know, is this an accident waiting to happen? Maybe, but again, I think here you could easily you could come up with a very articulate argument for why this has to press all the way back into the 75s, or that this is going to puke back into the 60s, or 55s. I think here when you get this kind of headline flow, there's very little edge in trying to be aggressive, and I think there are far nicer opportunities across the board, whether you're looking at single stock names, whether you're looking at some of the ETFs, or whether you're looking at equities right at those highs, whether you're looking at that yen trade. I'm really not that interested to get involved here. Now, if you do get something hit the headlines and we get something really moving, then I could get interested. But right now, not too interested here. To the downside, I think the switch that needs to be flipped is that these 6250s, right? It's a big level on the weekly. We've seen a lot of action around this zone. And I think any dip that gets bought ahead of that level, this is probably going to try to correct higher. If we get daily, weekly closes below this level, then I think the 55s will probably come into play fairly quickly. But for now, really not a lot of interest in doing anything really on this. I don't have any open positions. I don't have nothing of too much interest there. Anything else anybody's doing, looking at? Any questions, any comments? I mean, Euro, again, we looked at it briefly yesterday. I think, sorry, earlier. It's the same thing. The way, if you remember, we've been talking this on the weekly outlooks too. And we always, we understand that a lot of people like to focus on, or they get excited with what happens 20% of the time, but we like to focus on what happens 80% of the time and on healthy market moves, right? So when we were selling off here very aggressively, we said, as long as we can't attract new sellers at lows here, we'd be playing for a correction higher back into these two moving averages, possibly into the 50, because we believe that healthy market, even if it's down, is going to move like this and does not move like that, right? So we felt there was a lot of covering. All the short euro, die euro crowd was getting very excited at lows when it clearly couldn't attract any new sellers. So we thought the edge there was to try and get long, right? Now here, the long was moving on quite nicely, but we got a bunch of that heavy euro data, which is not looking great. So it got a smackdown, but essentially we're right back to where we were here, right? So unless we get, in our opinion, unless we get a news headline or something really substantial happen, right? That either to do with Europe or a global general dollar move, we still don't understand why you would want to get short into a brick wall, right? So the way we'd look at this is essentially either the play is, if this is really going to crumble, you're going to either short the break lower or short the retest for the move higher. Or here, we still think, broadly speaking, we're in a choppy range, so we'd far rather play for moves back to mid or the higher end of the range, right? Even if they're corrective and this all holds and we end up lower, but we're not really into selling lows or buying highs, right? Silver, I mean, yeah, I think anybody who's been trading for a long time always has some horror stories on silver, crude gold, copper, stuff like that. I'm not a huge fan of trading silver, especially not futures is a big boy contract. So I'd much rather trade SLV if I had to. Metals have been funky, right? We've been seeing them getting smacked, especially gold, into the end of the London fix every day pretty much last week. So it just looks like there's a lot of, let's use a technical word, hanky-panky and wheeling and dealing going there. So unless you're trying to hold some kind of a position trade or you're trying to spread this off against something else, I don't see what the interest is here, right? I like to look at it to get a feel for flows or to get a feel for context, but I'm definitely not going to be getting short here, right? Expecting it to break through, multi-year lows, and I'm definitely not going to want to get long with, a $2-3 stop, right? If I had to do something on the long side on metals, I'd much rather get long gold or something that has much better liquidity, really. So I don't know if you have a specific question on silver, but right here, it's just been doing what it's been doing for years, is much to do about nothing, really, right? That doesn't mean you can't make money or lose money intraday, but see how it's just stuck. I mean, forced to say something, it looks like it's trying to build a base and break higher. Does that mean I think there's a good trade in here? Not really. And if I'd want to get long, I'd prefer to trade that through something else, to express that view through something else. But what is interesting is, in the face of what's been going on, all things being equal, how well it's been holding up. And to a certain extent, you could argue gold too. Okay? Anything else anybody's looking at? Anything else anybody wants to discuss? Yeah, ZBs are kind of stuck here. I think that whole 146 level is very interesting. I've been trading, that's the only thing I've been trading today, really. I've been trying to scalp ZBs to the long side a little bit just here while I've been doing the webinar, really. And that's the only thing I'm kind of looking at. Very short-term positions, very tactical, not looking for huge moves, but that's the only thing I'm really doing off some other core positions I'm holding. I haven't taken any trade on FX today at all. And I'm just watching here. I may be getting interested to maybe short some NASDAQ, but we'll have to see. We've got a lot of earnings this week. A lot more focused on Tesla. We've got Amazon towards the end of the week. So it should be interesting. It should be interesting. But clearly there are a lot of gaps to fill to the downside on equities. So then they're starting to look tired. That doesn't mean you'd be just going, balls to the wall shorting them. But I think still I like the Russell shorts holding those and tactic. Yeah, the way we've been trained tactically in the weekly webinar, I'll tell you, the whole last week on the indices is basically sell the open, trying to get 5-10 points, 10 points on the NASDAQ, and trying to scalp 10 points, 20 points on the NASDAQ, and trying to scalp 5 points on ES or the Russell into the open, into that 10, 11 a.m. window, and then either flatten up or try and flip long, and then rinse and repeat the next day. That's the way it's trading, right? Unfortunately, there's nothing much to do unless you're trying to hold some core positions. Exactly. Yeah, so again, it is what it is, right? It's unfortunately, to a certain extent, when volatility is so compressed as traders, especially if you're trading intraday, you're, what I'd like to say, is technically unemployed. So I think what you have to do is just step back and be very patient. I think the trick is to stay as detached as possible, but not detached to the point that you lose focus. But there's no, you have to you can't force it, right? You can't force it. You have to be patient. This is where a lot of traders get into trouble, either style drift, trying to switch between different time frames, desperately looking for the chart to tell you something. But you know, when we're stuck in very tight ranges and nothing's happening, if you look at something like even the I can't remember now, but yen last week, we had like 2 or 3 days in a row when price was stuck inside an 18-20 pip range for the whole day. That's all you need to do, right? All you need to know, right? Is just, you got to be patient. You got to wait. Identify the levels, identify where you want to be active, but clearly it's not a time to get bigger and bigger and bigger. It's a time to either dip your toe in the water or just wait for something to set up, right? That's the only thing you can do. Okay, looks like I've gone through most of the question, guys. I'm going to get back to trying to see if we can make something work here on NASDAQ or the ZBs. It's a pleasure seeing everybody live. I'm going to cut it short here. We got about 30 minutes, so I can upload it on YouTube. It won't take too much time. Wishing everybody an awesome rest of the day, awesome week ahead. Thanks for stopping by. All the best, guys, and take care. Have an awesome one. Bye-bye, guys.